This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Happy New Year and welcome to your first TF Metals Report podcast highlights for the first week of 2022. It's been a very busy week. Caught a lot of folks by surprise how the metals traded as we wrapped up 2021. We finished it in pretty strong fashion. The dollar was declining and the precious metals were rallying. We were hoping for some momentum to carry over into the new year. And boy, did we get a cold slap in the face on that first trading day, Monday the 3rd. Gold and silver both got whacked pretty hard, primarily due to a rising dollar. The dollar bounced from its 50-day moving average. That certainly got our attention and as a warning shot, really more than anything else, for the week ahead. Also, a rise in real interest rates on Monday, as evidenced by a falling TIP ETF. That didn't help either. Anyway, it all set us up for what was going to be a volatile and frustrating week ahead, and that was all part of what we discussed on Monday the 3rd. My biggest concern, as I mentioned earlier in this podcast, is we broke down, as we were expecting last week, fell back into the channel and got to the 50-day moving average. In fact, we almost precisely got to it on Friday. And then had this massive green candle today. Looks a lot like, see a little purple arrow I got pointing to it? See that in late October? Broke, we're sliding down. One day, tapping the 50-day, and then immediately another big green candle. Oh, we kind of went sideways for about 2 weeks and then really took off. Now, situation's not the same. This whole period in November, that big rally from 93.5 to 96.5, 97, that was all driven by, everybody waking up to inflation at the same time. And so the dollar just, remember, when it really took off in early November, 94 to almost 95 in a day. That was the day of the CPI. Wednesday, the 10th of November, I think is what that was. So, this big green candle coming off the 50-day doesn't necessarily mean we're now going to go, that was 94 to 97. We're now going to go from 95.50 to 98.50. I might. But this does kind of concern me that we bounce like that from the 50-day. So we probably expect a little more strength in the dollar. Maybe it'll come up and, round off again below 97. But we're going to have to watch it closely. Keys later this week will be some of the economic data and, of course, the BLSBS on Friday. After that thrashing on Monday the 3rd, the metals bounced back a little bit on Tuesday the 4th and actually gave us some hope that they had bounced and might be able to turn the week around. As we went through the week, unfortunately, we found out that was not going to be the case. But at least on Tuesday, there was still some optimism as gold bounced from its primary moving averages and maintained what looked like about a 3-week up channel on the chart. All of this just a small part of what we discussed on Tuesday, January the 4th. Oh, and notice this on COMEX Gold. Not only did we once again hold the 3 moving averages, the keys. Now, the 100 days all the way down there at 1795. But yesterday, we bounced off of the 50-day and the 200-day, as we did again today, and now we're well back clear of them. We're a good $8, at least, almost 10 above the 50-day moving average again. So this looks interesting. And then look at this. 1, 2, 3, 4, 5. There's about 3 weeks worth of candles in this little channel I've drawn, though. Those are 2 perfectly parallel lines. Interesting little channel that we're in, isn't it? And also interesting that it would, a next move up to the top, if that's what's coming, would take us right back to that resistance level up near 1840. Early on Wednesday the 5th, the bounce in the metals continued. In fact, gold completely retraced all of its losses from Monday, and at that point was up on the week. And everything looked okay, except along came the FOMC minutes for December, and those were posted after the COMEX close on Wednesday. And obviously they were ominous for what was going to happen during the rest of the week. Another ominous warning, though, as the week unfolded, and this was before the minutes, was the trading in the TIP ETF as a measure of real interest rates. If the TIP is going down, real interest rates are rising, and vice versa. And since the first of the year, the TIP had been going straight down. And that continued on Wednesday. And that's obviously a flashing warning sign, not only for the rest of this week, but maybe the rest of this month and beyond. All right, here's that chart of the tip that I told you has me so concerned. I left the little bullseye on here. You notice where I picked it off, 8/6/2020. You see that? The tip that day was 126.51. And we know what 8/6/2020 was. That was when gold peaked at 2080. Now, here we are, almost all the way back to that level. But you can see this area around here, 128-ish, 127 to 128. We bottomed out at 126.50 back there in June. You see that? This has been the area that we've been we've been around here now for almost a year and a half. Where would I get nervous? Well, again, I don't like being under 128. We've talked about that often. And this has been a terrible way to start the year. Again, we finished last week almost at 129. And now we're under 127 in just 3 days. Let's watch that 125 level. See the lows in November of 2020 and again early last year? We come cascading down and break down through there, 125 into 124. Okay, well, you know what? That would mean the Fed is serious. It means the market is taking the Fed seriously, and that we're heading into a substantial, maybe tightening cycle again. Remember, the tip and the real interest rates have been moving since the end of November 2018. So it's interesting. This is, again, I've told you this every day this week. This is the one thing that really has my attention, and we will continue to watch it. Thursday, January the 6th, brought our first Thursday conversation of the year, a visit with our old friend, the golden jackass himself, Jim Willey. That, of course, is free public content. Anybody can go to the TF Metals Report homepage, access it, and give it a listen. You're sure to be entertained and informed as well. And then on Friday, January the 7th, we finally brought what has been a frustrating first week of 2022 to a close. Many of us, really probably all of us, blindsided by the FOMC minutes back on Wednesday and the news since that has led a lot of folks to think that the Fed could start hiking the Fed funds rate as soon as March. The metals took it in the shorts, but they hung in there okay on Friday, actually bounced back a little bit. So your final chart of the week is COMEX silver on the weekly version, and you can see that this is always very important for it to hold above 22 on a weekly closing basis. After that huge move in July of 2020, where silver moved 50% in just 3 weeks, breaking out of a range that had restrained it for 7 years, silver has now taken the last 15 months to consolidate and move sideways and digest those gains, get used to a new normal. As long as silver stays above 22 on a weekly closing basis, we're still in this pattern. If it breaks down, well, then we might be looking at something closer to 20. But for now, silver bounced again back on Thursday from 22, and it's finishing the week well above 22, ahead of what will be a busy week next. All of this talk about the Fed raising rates, it all has to do with inflation, and next week brings the latest updates on inflation in the U.S. at the consumer level and the producer level. So be paying attention next Wednesday and Thursday and really all week to see how the metals respond, and then come back next week for another one of these TF Metals Report podcast highlights. Have a great week, everybody.